Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we're just going through this week. It's unbelievable the amount of volatility. I've been talking about these choppy markets, and we continue to stay under that key number that we printed last week at 3712. We're seeing these gyrations. We had a downward reversal on Monday. We had an upward reversal on Tuesday, and we also had an RXT sell. And I'll talk about all these details here in a few minutes in the technicals. But today, that's kind of been hidden in the background. We've got the FOMC coming out. We've got a couple other reports that I'll talk about here in a minute that are coming out. But there is a lot that is going on right now. Markets rallied for the most part in hope of a stimulus deal. How many times have we seen that headline over the past several months? Maybe they'll actually do something. I think today when we see Chairman Powell discuss what's going on at the Fed, that they're going to once again use a whole bunch of terms that we're used to hearing, that they have lending powers, not spending powers. That's where the fiscal side will come in play. And don't forget, we have the fairy godmother on the way. We have Janet Yellen coming to the Treasury. All of this stuff is lining up. They're going to pump these markets to the moon. I've seen these comments on the channel that we're going to the moon, and we probably are. There's always something that could come into play that would derail all of this stuff, but it doesn't look like that's what's happening. We're continuing to see a massive amount of talk about the roaring 20s, all kinds of stuff that's in the news lines. I mean, if you can digest any of this stuff, it's amazing in itself. The amount of information and other types of things that are out on the street. As I've said many times on live streams and in videos, we live in a time where it's nearly impossible to figure out what's real and what isn't. And this is going to be more prevalent as we go forward, I believe. As we look at yesterday, we saw some reports come out. We did see industrial production come out, up 0.4. We also saw capacity utilization come out at 73.2. The best estimates that I saw out there were around 72. So this was sort of a blowout number, considering that the economy, for the most part, is upside down, and none of these numbers actually make sense. We're going to hear Chairman Powell talk about a number of things, especially with the spikes in the virus and all of the elements in the background. He's going to continue to tell you that the programs that they put in place are going to be used. I think the best time that I'll be able to discuss this will be in the live stream tomorrow. So make sure you tune in at 1:30 New York time, and we'll be live when the Fed comes out. We usually watch the initial statement together, and then I'll be able to comment and see the market's reaction. So a lot to go. This will be a significant live stream tomorrow. So once again, 1:30 New York time on Wednesday. But as we look to other fundamentals that are coming out today, we're going to see housing index come out. That's expected to be at 0.88. There's some other metrics coming out, but what's interesting, no one with any real credibility in the prediction world that I could find anyway, we're really stepping up on some of these economic numbers because the economy is just all over the board. There's sectors that look good. There's sectors that are blowing up. There's a lot of things that just don't make any sense right now. And I think they like it that way. So as we come into Wednesday's opening, we're likely to see some moderate weakness. Even with the RTX sell signals they got yesterday, they don't indicate a top. They have in the past, but oftentimes all they do is suggest a sideways pattern. And I think we're going to see some hesitation early tomorrow, especially ahead of the Fed and all the stimulus talks that are going on. So let's go ahead and dig into the charts and see what they're telling us for Wednesday. As I begin with the WaveTech Database review, we did have another 700 and 68 sell signals, and we had about 935 buy signals. So we saw a slightly bullish on 3.2 and negative on 1.2, and the database actually upticked from 68% to 69.47. So we did see some net buying on the strength yesterday. As I talked about several weeks ago, I thought we would see the database go from around 80% down to 68 to 62% was my original target. We did print to 68. I'm not sure we're out of the woods yet, but the next couple of days will tell us a lot about the rotation in the database. Overall, as I look toward the end of the year, I still see a positive tone coming through the year based on both the short-term database as well as the intermediate. The current duration, because of the rotation that we saw today, has dropped from around 17.5 days average duration to 16.8, and the average holding is around 40 days in the short-term models. So this somewhat extends the potential for the markets to move higher. Over the past week or so, we've seen some reversal patterns, we've seen a number of things, but what it really has set up is a sideways consolidation, and that's what we're likely to continue to see. As we begin the review of the S&P 500, we look at the futures. We did get an RXT sell. RXT, or the extreme projected yesterday, was 36.86. We closed at 36.87 exactly, so just above that level. And what these RXT sells suggest is that typically we will decline toward the S1, S2 levels in the pattern. So as we look at the market grid for today, there's actually three numbers to pay attention to, and they are somewhat related. The S1 is 36.75, the 10-day moving average is 36.71, and the S2 is 36.61. So we're likely to see some backfilling toward the 36.71, and S1 pattern would be likely. So S1 with the potential, if you notice, of an R2, which is 37.12. We could retest that print high that we had back on December 9th. Now, the other cautions here that I'm seeing is that the PPMs are starting to fade a little bit. PPM 2 down below is actually declining. It's only up 0.9, and PPM 1 is at a 0.07. This suggests that the underlying trend is fading and is somewhat vulnerable, and we could see once again a retest of the market moving down toward 36.35. So the next two sessions will be very critical, and with the Fed coming out today, it's going to be interesting to see what kind of volatility and how market participants position themselves around this number. As we look at the SPX, we got a clear RXT sell, which is the 3686.69 was RXT. The close was 3694.62. As we look at the market grid for today, would suggest a move back to 3685 to 3674. And in that pattern as well is the 10-period moving average, which is going to be a key point to watch, is 3677. So just like with the futures, we're seeing PPM 1 and 2 below the first and second derivative. The only positive is that the PPM 3 has turned up and crossed through its second derivative yesterday, which is somewhat of a positive, but it just confirms what we already know about the underlying trend, that the markets are still in an uptrend. They're just grinding higher, and the potential, since we got the RXT sell, is for a 1 to 2 day sideways move. But there's just such a plethora of information coming out to these markets. I don't expect to see any flat type markets. I do expect to see an extreme amount of volatility and choppiness. As I mentioned in the opening comments, we saw a downward reversal on Monday, and we reversed the reverse by closing up at the high end of the range yesterday. So we can see if we can get a follow through on either direction. So far, we haven't been able to, so today will be a key number. If we can close above R1 today, which is 3704, that will confirm a move to retest the 3712 level and the possibility of going up to the numbers that I talked about on Monday night between 3721 and the 3750 level, which is a likely move by the time we get through year end. Next market I'll cover is the NASDAQ futures. NASDAQ also had that big reversal up yesterday. We did see a substantial move with the cash up about 1.25%. So we're looking at some follow through overnight. As we look at the market grid for today, you can see that R1, 12,637, the highs 12,627, so we're almost at an R1. I expect we could print as high as R2 tomorrow, just due to the volatility that we're seeing in the markets. S1 is 12,554, overnight been in 12,580. So S1, R2 is the likely scenario for today. The next market that I'll cover will be gold. A quick comment before discussing the gold market, and I'll just mention again, this week we'll end the videos on a daily basis. The daily videos will be back on January 4th. So everything will be back to normal. I'm taking a couple weeks off around the holidays, and I'll be coming back, and there will be a video on Sunday night, and then there will not be any more commentary videos until January. But I'm going to set up everything the best I can for the balance of the year. If you don't follow me on Twitter, make sure you do that. Portfolio Expert without an E. So, all right, let's dig into the gold market. Gold rallied as I suspected it would. We're starting to see a move up toward that 1870 level. I've discussed this over the last two videos. I don't see this as a big move out of here at the moment, but we are starting to set up a substantial bottoming pattern. And we saw this all reverse over the past 3 weeks when we printed down into the 1760 levels, and we've seen this pattern setting up. And I'll draw in a quick pattern that I think is going to be important to keep an eye on. And this is the pattern that's setting up. We're getting basically even an AB or a 1-2. I think it's more like an ABC pattern. So this is going to be muted. We could trade as high as the 1928 level in this pattern, but for sure the downside has been completed, and we're starting to set up this bigger pattern. Let's take a look at the weekly. This will show you exactly where some of the resistance points are and the work that has to be done yet before a major intermediate bottom will be formed. But we have started the structuring of this bottom. So this is an important point in gold, and I do expect to see this thing over the next 3 to 5 weeks set up a decent pattern and get set for a movement to the upside. Now, the PPM1, which tracks the 10-period moving average, it's at 1877. It's also down at a minus 0.38. PPM2 is a minus 0.16. And then we do have a positive upsloping 40-week moving average that is up at 0.38. And that was a number that I was talking about several weeks ago when we were trading below that number, that it was going to act as a magnet and pull the markets back above that level. So now it looks like we're going to be sandwiched between the 1846 and the 1877 level. I don't see us getting up to that number I mentioned a minute ago on the ABC upward pattern. Somewhere in the next 2 weeks, maybe 3 weeks, we might see a bit of a bid come in year end. This will complete the video for tonight. Don't forget the live stream at 1:30 New York time on Wednesday. Talk to you then.